Hope all of you are doing great. Can any one of you please tell me if I'm audible? Please you use the chat box and let me know if everything is perfectly fine. Yes. Thank you so much. Thank you so much, professionals. Thank you so much, Dinesh. Okay. A very warm good evening and welcome back again to all of you. My name is Rohit Golani and I'm a chartered accountant by profession. And on behalf of Optotax, I welcome all of you before beginning with this today's episode number 1. So as I can see, many of the professionals have already started joining. Like always, our professionals are sharp on time. So that's really a good news. Professionals never get late. हमारे professionals family कभी दूर late नहीं आती. Okay, so I'll take a minute or so of our professionals before beginning with today's webinar, because we are a family of professionals from all over India who are coming together for this mutual endeavor and benefit. So let's wait for all of our friends to join, then we can hand over this virtual stage to our esteemed faculty for today. So before beginning, I'll first like to know if each and every one of you had a happy Diwali, happy and safe Diwali, right? Because though India has significantly recovered from the dawns of Corona, but I guess fight is still not over yet. We still have to keep standard operating procedures maintained to fight with Corona. So keep sanitizing your hands, follow social distancing norms, and please don't forget to wear the mask. It is really a must. So to kick off today's webinar, which is brought to you by Optotax. Optotax might be used by all or many of our professionals already, but those who are new to this family, let me let you know that Optotax is India's #1 and biggest GST platform now. It has been trusted by 50,000 plus tax professionals and for their 1 million plus clients, and it is already counting. We are a technology and knowledge platform, and we in our journey have always tried to make your GST compliances seamless and hassle-free in your offices. It has been engineered for your empowerment and benefit only. So please do give it a try, as it is totally efficient and hassle-free in your offices. And also, we recently organized a webinar on overview of IBC for our professionals' growth and learning. It was so well crafted and deliberated by our esteemed faculty, A.K. Gupta ji. So to all the professionals who foresee their future in IBC and also want to know about the provisions of IBC, so you can go and watch it on our Optotax YouTube channel. It is easily available there, free of cost. So if you like the content, please give it a thumbs up, and also don't forget to hit the bell icon for regular updates. So now coming back to today's topic, which certainly is an emerging landscape for CA community. It is valuation. And today we are going to talk about overview of valuation, like concepts and purpose of valuation, role of chartered accountant in valuation, why pursue valuation in practice, and introduction to ICAI valuation standards, and obviously techniques for valuation. And this all will be broken down in simple words by our faculty for today. He is ca.ankit Goel ji. Though Ankit sir has no dependency or introduction, still it will be my honor if I get this chance to introduce him before all of you. He has immense knowledge in the field of valuation, IBC, SURF IC, etc. He is a founding partner at AAA Valuation Professionals LLP and AAA Insolvency Professional LLP. He also is a managing partner at AAA G & Company LLP and director at AAA Capital Services Private Limited. And also, he is a registered valuer for securities and financial assets, class of assets with Insolvency and Bankruptcy Board of India through ICAI VRO. We are really delighted to have such a knowledgeable and dynamic personality like you with us today, sir. We are really looking forward to proceed with this webinar. First of all, thank you so much for being part of this webinar today and giving us this chance again to hear from you on this very interesting topic in which you have naturally mastered. So now I won't take much time for our professionals, and I'll forward this virtual stage to you so that
Thank you. Thank you, Rohit, for that introduction. Thank you so much. And thank you, Optotax, to have me here again. It's always a pleasure to talk about the experiences and the knowledge one builds up as they work during the profession or in the profession. And I'm sure that all the 89 or 100 odd participants who are here with us today would also agree with me that whenever they share something with somebody, they learn a lot more than learning in that process. So I will, I think, use this opportunity and share and learn whatever I know about valuation. So I think this is a 3-day session that we are having on valuation, and today is the first day that we are kickstarting this. And the idea today should be that uh, I should talk about those parts that will help you understand the opportunities in detail in the forthcoming 2 days, because the topics for the next 2 days are much more detailed and much more dependent on the discussion and understanding of the valuation opportunities that we're going to discuss today. I will request all the participants that we should have an interactive session. So every 15-20 minutes, I will ask in case you have any questions. At that moment, those attendees who would like to ask something, talk about something, and raise their hands. And we will try and be on the topic. So we will try and discuss whatever we are discussing, whatever we have already discussed, rather than anticipate, future questions. So please keep noting down your questions, putting them on your chat box so that we can have an interactive session.
Yes,
So I
okay.
am I'm sharing my screen and
So urging all the participants, please make it an interactive session because so much effort have been put by our faculty for today. So try to reap as much as possible from this today's session because Ankit sir really tries to make this session interactive. So we'll be helping him out and we'll try that this session will reap out as much as possible from this session. So over to you, sir. Virtual stages to you.
thank you so much. I'm just setting up my screen. Yes, that works well. So, going forward, I think these are some slides on Optotax. So, do try out this platform as has already been shared by Rohit with you. In case you're not already on the platform, and in case you're already on the platform, then I'm sure that you can refer the platform in case you like it to other friends of yours. This is what is the agenda for today. We're going to talk about the concept and purpose of valuation. We are going to talk about role of CAs in valuation. We will be talking about why one should pursue valuation practice. What are the opportunities available for professionals like us? Introduction to valuation standards, and last we'll talk about techniques of valuation, techniques for valuation. So the idea is that we need to understand what is value. So in case we talk about the word value, we talk about jargons and academic concepts with respect to how the word value refers to the judgment of the value of the estimated amounts consistent with the one on the basis of value set out in IVS 105. This is a very highly technical value. So the idea is that whenever somebody asks you for a value, for a number, you ask him, what do you need this valuation for? So maybe somebody will tell you, oh, I want to sell my mobile phone. Can you give me a value that I will be able to realize for this mobile phone? This mobile phone is very dear to me. I really want, I had a good time with this mobile, but no, I have bought maybe a new mobile today and I want to sell this old one. So any guesses on the chat box? How will you value it? What will you do to estimate the value of that phone? Keep interacting on the chat box. It will be helpful. I hope you're able to chat. Yeah. So the market value of second-hand phone, but the point is that, okay, that is the market value of the second-hand phone, but how will you find it out? I understand that, yes, maybe the value will be market value of the second-hand phone. Cost minus depreciation, somebody is telling me. So, somebody is telling me cost minus depreciation. So, in case maybe I purchased it 2 years back, 3 years back, I can depreciate it by say what, 15%, 10%, 50%. I don't know. Market value, then from comparable market transactions. Where do I find these comparable market transactions? That is my question to you. How do I find the comparable market transactions as a valuer? You are a consultant, somebody is asking you what will this phone sell for? How do you give him a number? How do you give that person a number? So my answer is you go to OLX, you see, you look for that phone. Okay, maybe you don't find it, you find it. Cashify website, somebody is saying. So yeah, now we're coming to the point. So we say, okay, I want to sell my old phone and see what all sites come up. Maybe you have some websites which are already having an algorithm to find out a range of value for that mobile phone. Of course, depending on the condition of that phone, you have a cracked screen. No, you can't have the same value that one can have in case he has the phone in a brand new condition. I think we're all sure about it. So that is the idea, that whenever somebody wants you to value something, you need to understand what is the best method to value it. How will the market participants participate in the valuation of that asset? So now let's come to an e-commerce company. Let's look at maybe an IPO share, look like Paytm. You want to perhaps look at the idea that you are thinking about, oh, I should invest in Paytm during its IPO or not, or maybe should I invest in IPO once it gets listed? Should I invest in Nika after it has got listed? So how will you value it? Maybe you go to your friend comes to you and asks you, please tell me the value of this stock. I want to understand in case I want to go for this stock or not. Is that a good value that I can get out of purchasing the stock? So how will you compute that value? What will you tell him? What are the value drivers for a stock like Nike or Paytm? Anyone? Fundamental analysis. Okay. What is the fundamental analysis, Mr. Narayan? Fundamental analysis in stock markets is always good, but what do you do in fundamental analysis? What do you check? Brand and technology base, you need to understand. Financial parameters, he's saying, Mr. Narayan, that he can look at financial parameters. Growth prospect, very well said. Intrinsic value. So Yogesh, intrinsic value is again a value, a basis of value. But then the idea is that intrinsic value also talks about the value in growth and the value of future cash flows to the company. Because consistent profitability, Mr. Karan Chandwani, if Nika has some profitability, but Paytm has no profitability at all. And people are saying these days that look at the P ratio of Nika. I say you can't even compute the P ratio for Zomato or Paytm because the profits are or the earnings are negative. So what else? What else are other people saying? I think I lost track of the comments there. So we can apply industry PE ratio. Yes, the PE ratio, if you apply it, you will find a very, very high PE ratio, at least for these stocks. Revenue cash flow generated, discounted cash flow per value, okay, various ratios, discounted cash flow, co-founders profile. Yes, Narayanji, I agree with you. Co-founders or the people who are managing this organization today, their profile or the management's attitude towards investors is always an input into the value of any firm. Revenue and future growth multiples, growth of business, comparable company multiples, future potential, EV by EBITDA, products or services offered. So yes, we have many answers. Some different people perhaps will see the stock differently. Some will say, oh, look at some will say, oh, I will buy Paytm because I missed out the opportunity on buying Nika. Maybe I will participate in the IPO of Nika because I missed on the opportunity to participate in Zomato, right? So there can be various thought processes. At the end of the day, we know that yes, these stocks are there on the stock market. They have got all the regulatory approvals. They have come this far. They have got subscribed. They have got listed, and 2 out of the 3 stocks have listed with a margin. So Is this the price? Is this the value that we are seeing today, the price? Can I say that value is price here? No, I cannot say that, perhaps because value and price are different concepts. Price is what you're paying today, and some say value is what you get. So, in case you have an opinion that the valuation of Paytm or some other stock perhaps is more than what it is being sold for today in the market, then maybe you will go ahead and buy it because you are thinking that, oh, this stock is underpriced because it has a higher value than what it is priced today. And in case you feel that no, this stock is overpriced, in that case, perhaps you will be the first person to sell it or never think of buying it. So that is what we mean by value. When we see value, we try to find out that what is the value that somebody will think of when he sees this asset, sees this stock, sees this company, sees this business, and so on. Today, I was interacting with one of my prospective clients who has a factory in Chhattisgarh, and he was saying, "Please value my business. I want to sell my business and exit this business." So that is, he's trying to find out that what value will somebody see when somebody is looking at his business. Definitions of value. Yes, value can be defined in multiple ways. There are specific definitions given in laws like Insolvency and Bankruptcy Code, in the International Valuation Standards, in ICA Valuation Standards, in Ind AS fair value definition, you can all remember. So relevant statutes have various definitions. Then many definitions are defined by the case laws around that concept. Contracts and agreements can have some examples with respect to how parties agree that the valuation of shares will be after 5 years. Maybe today, investment happens. One person says, "Oh, we agree that yes, this is the value," and then after 5 years, you say, "Oh, okay, this is the formula that we agreed. Let us use this formula, find out a value." Somebody can say, "Oh, I will give you a value of 5 times your EBITDA at that year, or that last average year, or last average 3 years." In that case, that is the value. There is no dispute over it then. Various professional bodies have also given various values. There are different values to it. You want to say that, okay, you have an old car, you want to sell it off. You can sell it off after conducting minor repairs, shine it, spend some 500,000 rupees on that car, make it as shiny as possible, and then show it to the prospective buyer. Sell it as good as new. Sell the car as good as new. And what is the alternative? The alternative is that you say, okay, it is the way it is. It is full of dust. It is not maintained. It is perhaps lying there at one location for a while. That is the other way to sell it. Will you get the same value? Maybe not. I'm talking about the value net of the expenses. So your net of expenses value, in case you go for minor repairs, might be higher than somebody who is not doing that. So similarly, in case of stocks, if you create a good market, in case you tap the right market, there is a possibility that you will get many more people in the queue to buy that business, and maybe otherwise you will not. So then there are ICA valuation standards also talks about valuation. It says value is an economic concept, an estimate of the likely price to be concluded by the buyers and sellers of a good or service that is available for purchase. So it is not a fact, it is an estimate of likely price at a given time in accordance with particular definitions of value. So time is important. You see a valuation report on a particular date, you need to next think that has anything changed since that date. Maybe, because of COVID, other factors, economic problems that India was having prior to COVID, there was a slump in the market. Assets were not getting sold. Sick assets were lying around. Nobody was a taker for them. But today, in case we talk about our experience of more than 200 insolvency cases, we see no asset getting left out. Everything is getting sold out. Everything and everything. So price, what is the price? Price is the amount of money given and all that. I think you know that. So we've already talked about it. Let's skip that. Price versus value. You can have a look and understand this concept. Now let's understand what are the scope. What is the scope that comes to the valuer? What is the practical side of building a valuation practice? do you then get an opportunity to do some valuation assignments on some fee out of it? Let's look at that. But before that, I will like you to ask any question on whatever I have spoken so far. Anyone who has any question, you can either put it on the chat box or you can raise your hands. Anyone having any questions? Okay, so I think we have no questions. Let us proceed. Just a second. Yeah, so we are back, and let's talk about what are the opportunities with respect to doing valuations today. So anyone who can tell me on the chat box, what kind of opportunities do you see coming to you or coming to your fellow professional valuers in the course of time, and where you feel that you are required to do a valuation assignment, or you gave a valuation assignment to somebody else to do it? When did you had when did you last, or what was your experience with respect to getting a valuation? What was the purpose of that valuation? Startup valuation. So Nikunji is saying that he went for a startup valuation. So what purpose was the startup valuation serving? Maybe it was for the purpose of the investor to gauge the value that he should pay for the startup. Maybe it is for the company to understand what value they should ask for. Maybe it should be about understanding the understanding the um, understanding the value from the regulatory point of view, whether it is FEMA, income tax, or company law. Insolvency area, Mr. Vedyanathan is saying, very well said, sir. So IBC has requirements, regulatory requirements to get valuation done, and that valuation number plays a very, very important role in the whole insolvency process. Seed funding, yes, Nikunji. So seed funding, the idea is to just get that money in, right? So Sagar Shah ji is asking, saying mergers. Yes, so mergers, who requires the valuation? The courts need a valuation. Why do they need a valuation report for during a merger? What is the objective of trying to do a value to understand the swap ratio? Very well said. So swap ratio is decided based on independent valuation, so that there is no so that nobody can say that yes, there's something malified about the exchange ratio. Estate planning, yes, very well. So somebody can say, I want to plan the succession of my properties or succession of my properties to the next generation. I want to find a value today so that I can try and divide the assets based on their values today. Valuation for private company which are funded by private equity, Mr. Nadal is saying, and Nadaf is saying. So yes, valuation for private company for funding by private equity is again something that the company, as I already said, wants to get done. Value of healthcare software developed, right? So healthcare software that somebody has developed is what? Is an intangible asset, perhaps. It's a creation by somebody. Maybe it is not even a business. So that intangible asset can be valued for what? For maybe the future purpose, maybe for some kind of a FEMA transaction, income tax transaction. There it might need a valuation. Project financing, expert opinion, ESOP valuation, right? ESOP valuation is required especially for the purpose of compliance with SEBI regulations, as well as for the purpose of compliance with the Income Tax Act. Why do they need why do they need a valuation? Income tax says, okay, we need a valuation perhaps so that we can make sure that you have paid tax on the fair value that you have received for the with respect to the share. And yes, maybe the SEBI regulations require it to safeguard the interest of the to the ESOP equity holders as well as the current shareholders of the company. Investor exit. Yes, investor exit is another reason why the valuation can happen. So investors might agree, as I already said, with respect to a valuation formula based on which they will like to offer exit to somebody. So thank you so much for these inputs. These were all very good inputs. And the idea is to understand the framework today, understand the opportunities available in various acts and regulations. So Companies Act, Section 247 was put in force. Section 247 of Companies Act says that, okay, one needs to be a registered valuer to do valuations under Companies Act. So as on date, all the valuation requirements under Companies Act, wherever they have been stated, statutory requirements are required to be done by a company. Then, of course, we talk about understanding the company's registered values and valuation rules. So Section 247 talks about how the things will be conducted, how the registered values will act, is all based on the rules. And that's where the rules come into force and also play an important role. Then you look at a transition arrangement that has been put into place that is no longer applicable, though, because the transition to the new framework has already happened. And then, of course, IBBI was tasked with preparing a framework. So what simply happened was IBBI went to the government, said we need good valuers. The government said, oh, we don't have existing framework, so let us notify Section 247. And why don't you create the valuation framework and try to create an infrastructure for the valuers also to register themselves as registered valuers with you. And that's what IBBI took up. But later, at the end of the whole journey, perhaps they said that, no, this is not this is not going to be a regular affair because we are rather Insolvency and Bankruptcy Board of India. Why should we take a valuation for everyone? And there is a draft valuer bill which talks about inducting all the or introducing all the valuation assignments which are there in various statutes, and give them to the registered valuer as you call it today, but under a new act called right now called draft valuer bill. Then, of course, you have companies, I said, rules. So you want to talk about the rules, you want to talk about how the framework is available under the IBBI regime to be followed. Then IBBI has designated a principal regulator while multiple competing RVOs act as frontline regulators. And then, of course, you have limited applicability to all these regulations are so far applicable only for CAs, IBC, for the Companies Act, IBC, and few SEBI regulations are covered. And basically, ad hoc arrangements are there, and persons in employment cannot be registered valuers. So, these are some IBBI regime highlights that you should know. The idea is that yes. Although there is a complicated structure that is followed by IBBI in enrolling RVOs, that structure is still temporary till the time the National Institute of Valuers is not set up and valuers are recognized there. So let's see how that shapes up. So opportunities under the present regime, you might have Companies Act wherein you need the preferential allotment to be done. You have purchase and purchase of minority shareholder under Section 236. You have mergers and acquisitions, and you have non-cash transactions, issue of sweat equity. Insolvency, you have all these CRP and liquidation and personal insolvency or personal bankruptcy related matters where you might need a valuation. And then SEBI regulations, you have InvITs, REITs, and securitized debt that can require or that might be required by somebody. So what is the market share of this valuation business that we're talking about? So I would say the market share is is basically the number of companies that are there in India are more than 11.28 lakhs, and that's a big number. And then you have IBC, you have CRP cases, you have liquidation cases, you have voluntary liquidations. So these are all numbers, although a little old, but the point is that these numbers give you a basic idea of the opportunities available in the market after becoming a registered valuer. As a chartered accountant, what all valuations can you do? Can you put it on the chat box? As a chartered accountant, what all valuations can you do presently? Can you do FEMA valuations as a chartered accountant? Please post on the group, whoever has a clue about these answers. What about income tax? Valuations under income tax that a chartered accountant can do? Any other act that I am missing where the chartered accountant can do some valuations? ESOP valuation, somebody is saying, yes, that can be done as well. Valuation of goodwill, somebody is suggesting. Yes, so consultative valuations you can do. IBC valuations you can do as a registered valuer, not as a chartered accountant alone. So in case only you are a chartered accountant, then you will not be able to do IBC valuations. Sweat equity valuations you can do. Okay. Anything else from anyone else? So I think that's near accurate that yes, FEMA valuations one can do, but even in FEMA, with respect to the overseas investment regulations, they have come out with a new system or new draft which they have given for consultation. That draft does say that the CAs will be replaced with the wherever CAs were required to do the or were allowed to do valuations, I should say, have that word has been now replaced with registered valuers, because the registered valuer framework is being pushed by the regulators in the overall economy. So this is your geographical distribution of the RVs. You can find it in the IBBI newsletter. I won't spend too much time on this. We have lots of things to cover. This is your average age of RVs, a little old data, but the point is that yes, this data can help you understand how the distribution is there between SFA values. Geographical spread versus population, you can have a look at that. Steps to become a registered valuer. The idea is that if you're a CA with 3 years post qualification experience, you're eligible to become a registered valuer. Well, you have to do a 550-hour education course with any RVO, pass the valuation examination, and apply for membership with RVO and IBB as registered valuer. So this is the process. There is a syllabus. You can have a look at that. I don't think that's something that you would like to discuss here. You can always have a look at this examination. This is the pass percentage for examination. So study hard, try to improve this percentage. And the idea is that for with every, you will see that there is a slight variation with every phase with respect to the successful attempts. But the idea is that yes, there might be multiple attempts, and that is the percentage of passing that is there. Then report of the committee of experts was there. So I think we've already talked about it. You can also go through it in case you want to understand the future of valuation profession in India. This report will strengthen all your beliefs with respect to how it can rise, how it can improve. Let's see how it will be executed and when will it be executed. So you need to understand the important features of the bill. National Institute of Valuers to be set up, valuer institutes, VPOs, and valuers to be regulated by NIV, promoting profession or valuation by enforcing standards and growing conduct, protecting the interest of users of valuation services in India, multiple methods of entry in valuations. So all these are important features of the bill that you can, of course, improve. You can, of course, understand. So then coming to the definition of valuation services in the draft valuer bill. Now, why are we talking about this definition? Because it gives you a purview of what are the opportunities in valuation for everyone in the entire economy. So the first one is Banking Regulation Act. Do you think Banking Regulation Act can have an opportunity for SFA valuers? And if yes, then what can be those opportunities? Can somebody try and share with me? Opportunities available to registered valuer buyers, um, that from banking for banking regulation act. Anyone? Banking regulation act. What kind of valuations will be required under this? Banking Regulation Act, you're basically looking at basically valuations with respect to the bonds, with respect to making the companies, making the banks' balance sheets. So, in case you talk about banks' balance sheets, the banks' balance sheets can have various assets, various investments, and that's what kind of value in the Banking Regulation Act. And the Banking Regulation Act not only controls the way financial statements will be furnished by banks, it also talks about the various other checks and balances to make sure that the banking system is operating efficiently and without issues. Then we have then we have Securities Contract Regulation Act. So that's again an act in which there might be always be a possibility to value various securities contracts and give them a number, maybe some commodities, maybe some commodities, some futures, some exchange rates, and all that. Then we have Wealth Tax Act and Income Tax Act. Anyone who can tell me why is the valuation, or why was the valuation required under Wealth Tax Act? M&A between banks, Mr. Vedyanathan is adding. Very well said, sir. Banking Regulation Act also talks about mergers between banks and how the valuation will be done in that case. So, Securities Contracts Regulation Act, you talk about what? You basically talk about your sorry, wealth tax. What do you talk about? Wealth tax, you talk about the old thing was that in case you have assets more than this particular sum of amount, then you have to pay taxes on it. So wealth tax returns and wealth tax computation was also something that we used to do, and then it was abolished later. So it is not now very relevant, but it does have a very very strong requirement. Then we have Securities Exchange Board of India. So yeah, what do you think that Securities Exchange Board of India, and prior to that Income Tax Act, there are requirements for valuation? Income Tax Act, anyone knows what are the valuation requirements under income tax? Please post it on the chat box in case you're aware of some. Section 56, Mr. Tejal is saying. So section 56 says what? Section 56 says that in case you get some money or property without adequate consideration, we will put that to tax. Section 56 also says that yes, in case here there is a transfer of any asset which is less than its fair value, fair market value, then they will then it will be basically taxed. So all that is something that we need to understand. So gifts, yes, valuation of shares of private limited companies is also required under 5627B, wherein we talk about how the company cannot have a premium. And why was this added? Added to plug the loophole where people used to take all these entries from the market and so on from non-KYC or from non-genuine people. Then you have what? Then you have IRDA. IRDA again talks about maybe mergers of insurance entities, talks about compensation and various other items. FEMA, I think you all know, whenever money goes out for any asset which is coming to India or the opposite way, there is always this FEMA. And yes, new issue of shares outside the country also require FEMA to be managed and taken care of. Then you have securitization and reconstruction. That's again something where you have SURFACE. SURFACE helps banks in selling those assets in the market, against which then after selling they can exercise their bad loans and exercise their mortgage and get those amounts back. So that is what basically is we're looking at here. So Prevention of Money Laundering Act, PMLA, again has some clauses with respect to valuation. And then we have LLP Act. Then we have Companies Act. We have Pension Funds Regulatory and Development Authority. So these are, and the IBC also. These are some laws that have been stated in that draft bill. And of course, at the end of the day, it says that whatever arises from the needs of the market, it has also captured that and kind of kept it here. So valuers can be valuation entities, it can be associate valuers, fellow valuers, honorary valuers. So you can be any of these. I don't think this needs too much of time. You can always go for different programs, that is national or national VP or graduate VP program, or you can go for a 50-hour program. These are some qualifications that you might have to do, not very relevant here. Full-time or part-time, full-time or part-time. So basically the idea is that the idea is that they have said that yes, valuation is a part-time profession for most professionals, and they say that yes, we will give some time for everyone to see, try, and then shift towards the valuation practice completely rather than having multiple interests. What do you do to become a successful valuer? First, you need to get work. How do you get work? You talk about what you know. You share about that. You understand what one can do as a valuer, and what analysis you can do. What are the techniques? Learning about all those. That is what I think you should be concentrating on first. Then, of course, read, and read again. Your insolvency valuation professionals, and so on. So these are some of the things that you should do as a successful valuer to make sure that yes, you have a flourishing valuation practice. Any questions so far for me from anyone? You can put it on the chat box. You can try and share whatever you have with me. All right, so focus on valuing the or finding the perfect value every time. Don't do anything else. That's the motto that we follow. So that's the idea. Some common questions. Can CAs practice as valuers simultaneously with the audit taxation practice? Who will like to answer? Anyone? Yes, they can. There is no limitation today for CAs to practice as valuers as well as audit, as well as be partners in their CA firm. So there's no bar on that. Can CAs be partners in an IPE and at the same time, or in an RVE, being a registered valuer, and at the same time be in partnership in a CA firm? Yes, the answer is right to that as well. But yes, the IBBI restricts that if you're going for a job, ICA restricts that in case you're employed, then you should not be a partner. And that's something that has been extended to that is extended to the other side also. Then, if you're in employment, you may not be, you cannot pursue valuation profession. That is the idea. You have to be a professional, and that is only the way that you can be uh, be part of the valuation profession. Then you have the idea that will valuers have to work as valuers full time under the proposed act? Yes, after 4 years, 5 years, whenever they will feel that yes, they want the valuers now to work full time, that's when perhaps that will happen. Valuation bill proposes high penalties. Yes, high penalties are good. High penalties are good because then everyone will do good work, and there will be no shortcuts. And yes, hopefully there will be good fee as well. How will the new act help valuers with decent fee for their work? So the idea is that yes, that's the number controlling. So basically, we talk about how the current numbers of engagements and of valuers is very low as compared to the wealth tax number. But at the same time, I think the people or the partners are more active. They have clarified, cleared an exam. So yes, they are also well qualified. Any questions from the audience at this stage in time? So I have a question from Mr. Sundarajan, and he is saying that in the landlord, if the landlord of tenant wants to buy the business, how to value the rental land for the sale of goodwill. So the idea is that if you are having a status as a tenant and the landlord wants to buy your business along with the property that he has leased out to you segregate the overall transaction and see that yes, what is the value of that building that you're trying to value here, or sorry, the interest of the lease or the tenancy rights that you're trying to value here. That is what we will try and see through this process. IBA does not impanel registered valuers. The registered valuers under Companies Act are basically recognized by IBBI. They issue a certificate, and subsequently you can go to banks, various banks, and try and ask them to make you part of their panel. And once you're part of the panel, then they can try and get you some work. Whether that will be of a particular nature, I'm not sure. Any other question from anyone so far on whatever we have discussed? All right. So in case you have any questions generally on how CAs have opportunities under valuations, let me know. I've already shared that yes, CAs have valuation opportunities in the under the Acts, FEMA, as well as income tax. That's the major areas, and that's how it can be done. So there is a question that who conducts the examination? The examination is conducted by IBBI. The 50-hour training that is mandatory before the examination is conducted by a RVO. You can choose any RVO that you feel is the most appropriate for your purpose, where there is good faculty. I have a question that what about rating agencies, whether they need. So rating agencies will not really need valuations. The banks do need valuations whenever they're sanctioning a new loan. And at that point in time, they will request you perhaps to give them a report and see how that asset is, or the loan that the person is trying to secure is well secured. How becoming the there's a question from Rajat Anand, and he's saying how becoming these valuers changes the current style of CA practicing. Okay, so becoming valuers gives you basically a different perspective. A CA practice wherein you have perhaps maybe GST related practice, audit related practice is a very a practice which grows organically. It maybe depends on a few people who want to perhaps come to your organization as clients every year, and a few people may be dying down or leaving your organization for others. So that is what it is all about. And basically becoming the valuation so becoming the valuation values change in the current style of CA practicing is therefore that's how things are changing, and that's how you need to manage your two different affairs. And maybe you can use your common resources for the same, but then you can do it differently. Can we undertake property valuation as a CA? No, you can't do that. You can only take up valuation assignments for the asset class that you recognize for. So some of you who might be double, triple qualified, who might have other academic records that entitles you to become land and building, plant and machinery valuer, you can always become that, and then carry the license for maybe two different asset classes. So asset classes is important to understand that they have divided this into plant and machinery, land and building, and SFA, and that's what you need to understand, that asset division is important, and therefore they don't want maybe CAs to sign on valuation assignments for maybe plant and machinery or land and building. What kind of annual income can be expected on a realistic basis for an individual practitioner? So Vikasji, it depends on what kind of opportunities you're able to crack. In case you get large assignments from banks, wherein they are looking for valuers who can do some who can do valuations for restructuring assignments, for sale to ARC, and so on, then you will most likely have a higher income. And in case you're doing jobs like maybe valuation for fresh issue of shares and so on, then you will have lesser opportunities comparatively. All right, moving on then. So the idea is now to understand the framework of valuation standards. Valuation standards are basically what? The way we have accounting standards, the way we have audit standards. What is the objective of these standards? Let's start discussing that first. What is the objective of having any standard at all? Or what are the possible objectives? Maybe I can ask, because you all of you can give your own inputs on this. Why are standards asked for? Why are standards built up? What is the idea? How is having accounting standards helping maybe us as started accountants, or helping others in the society? How are auditing standards helping us in the in the country? So Mr. Dinesh Narang has correctly answered, to bring uniformity and compliances. I think you have nailed it. You have talked about both the things. So you bring uniformity and compliances. Then standards required to ensure discipline and same uniformity. Okay. Anyone else? So standard practice across all valuers is another answer. Regularization is another answer. To set a proper procedure. Okay, very well said. So that's what we're talking about. The standard, the valuation standards that we're talking about here are also very, very similar, where we talk about how there is a to-do list now. There's a to-do list for valuers that they have to do this, 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 and this. And only after they do all that and complete all that can somebody say that their report is a good report. And that's what we need to understand. And can that kind of ensure that there will not be large variation in two values reports? Will that ensure no large variation, or there can still be large variations in the valuation reports of two valuers who have valued the same asset or same organization? So there can still be a large variation, if I'm not wrong. I think the methods or the procedures don't say do this, do that. They say, in case you feel that this is the scenario, then do this. In case this is the scenario, do this. In case you feel that, yes, this check needs to be put into place, put that. But can a standard say that, okay, when you're valuing this asset, please take up market approach, or keep looking at the market and see what the market does with respect to this asset? And when you're looking at some other asset, it can be a DCF approach. So the judgment is not compromised. The judgment is not overridden by the standard, but the standard says or does add to the idea that whenever you make that judgment, you have to keep these factors in mind. That is what we will talk about when we are looking at the standards quickly right now. We will go through the standards quickly and say that, okay, and understand what it entails for us. These standards are important. They're statutorily required to be followed under the Companies Act. So all registered values have to follow these standards. There's no escaping it. And there are also punishments, penalties if you're not doing it. This is the way the general IVS works, and ICA valuation standards are very similar. But the idea is that IVS is way broader, because one, it takes care of tangible assets like land and building and plant and machinery also. Secondly, it is updated very regularly. Thirdly, it has been adopted by almost all registered value organizations. I think there are about 18 registered value organizations other than ICAI who have adopted international valuation standards and then taken them forward. So these are your general asset standards. So there is a standard on what should be the items that are recorded in the scope of work, what should be the way of investigations and compliances being done with respect to a valuation assignment, what is the reporting requirement, what is the basis of value, what is the valuation approaches and methods that are available. So all these things we will discuss very quickly because of lack of time. And I'm sure that you will like to know more whenever that opportunity comes in. And you can read IVS, you can understand that. So anyone who can try and give me, before I go forward, a difference between four concepts. Four concepts are valuation basis, valuation premise, valuation approach, and valuation method. Can you give me examples of these four concepts? I will repeat: valuation basis, valuation premise, valuation method, and valuation approach. Maybe you can give an example of any of these, or also share perhaps the difference between, or the definition of these, or rather the concept behind these. Anyone? Anyone? Valuation methods: valuing goodwill on basis of profits. Okay. Anyone else? So what is valuation basis? Let's understand that first. Rather, I think let's understand that as we go along in the slides. So then you have value, business and business interests. You have these specific standards which cater to a specific requirements. In case you're looking at a non-financial liability, or in case you're looking at an intangible asset or a business or business interest, then you have to look at these specific IVS for that, and also comply with these standards along with the general standards that are anyways available to you from IVS 101 to 105. Then you look at glossary. So basically, they have created three words that have been used, often in the entire IVS: must, may, and shall, and should. So the idea is that must is something that one has to do, should do, one has to do. There's no escaping it. May is something one can consider doing it and then see why that is not required to be done. Should is something that one should presume it is presumptively mandatory, but in case there are certain situations that are not allowing you to do it, then you have to state why you did not do it and then move on. Then you have I think I have a few chat box messages. Okay, so yeah, so that's how the IVS framework works. I think these definitions are not that important that we need to look at these one by one. IVS is an international standard. So what it provides for is a section of departures. And it says that in case you have a departure from the local law, then follow the local law. So basically, the international valuation standards kind of give priority to the local law. So in case the local law, that is maybe IBC, says that liquidation value is supposed to be defined in a particular manner, then that is how then you have to do the valuation report. In case the local law says that, okay, market value is what is defined in this manner, then that is what you pick up. You don't pick up some other value that is written in IVS. Okay. Scope of work: what all do you need to put in? You need to put in identity of the valuer, you need to put in identity of the client, identity of other intended users, assets being valued, valuation currency. Please remember, this is your scope of work. This is not your valuation report. Then purpose of the valuation, basis of value used, valuation date, and the nature and extent of valuer's work, the nature and sources of information upon which the value relies, significant assumptions or special assumptions, the type of report being prepared, restrictions on use, distribution, and publication of the report. The evaluation should be prepared in compliance with IVS, right? So these are the scope of works. Then, of course, if you make any changes in the scope, please intimate the valuer and make sure that you are given the valuation scope of work. And the final scope of work is with your client on or before the final report date. So you have to talk about the scope of work before you're undertaking up the assignment. What is the purpose of valuation? Purpose of valuation can be mergers and acquisitions, strategy evaluation, identification of under and overvalued assets, legal, financial reporting, regulatory. So what is the purpose of valuation when it comes to FEMA law? Why does the FEMA law require valuations? Anyone who can share their inputs on that? Common sense, I think you have been doing FEMA valuations for a long time. What is the objective of FEMA valuation? Why is it required? What is what is the protection against? What is the protection under FEMA law for valuation? Why is the valuation required? Very well said, Tejulji. Fund infusion should not be lower than the fair value of the company. For transfer pricing, Dinesh ji is saying. Sagar Shah ji is saying investment and disinvestment to be at fair value. Foreign exchange, okay. So the idea behind FEMA is, in case you read the law, you see the law says that in case money is coming into India for purchase of an asset, the situation should be such that the money can be more than the value of the asset, but should not be less. And when the money is coming in for the sale of an asset, it is the other way around, that the money can be more than the fair value of the asset, it should not be less. So the idea is to protect the foreign exchange of the country and preserve the foreign exchange, make sure that assets of India are not being sold for peanuts abroad and then being purchased at a massive price just to divert money abroad. And that is the case, that is how it is required to be done. So so that no Indian assets are sold at a price lower than the fair value of non-resident. That's what Sanjeev Kapoorji has also mentioned. So that's what we are looking at when we talk about FEMA. What is the objective of income tax when it comes to valuation? Why are they after valuations? What do they want out of our lives? Anyone? They want taxes. Very well said, Tejal Gupta ji. They want taxes and nothing else. So how will they take taxes from you? What are the different ways they want tax from you? That's where the valuation comes in. Valuing the value of gifts and transactions to tax. Okay, Rajat ji. So that's the idea. But then how do they do it? Section 56, what does it do? Section 56, first of all, says that in case you're transferring shares under subsection 2, clause 10, says that in case you're transferring assets from one person to the other, then you have to make sure that they are at least the fair value of those shares. And the income tax says that in case you're transferring shares to somebody and you're not taking 100 rupees for that sale, when the value of those shares is 100 rupees as per the method prescribed by them, in that case, that person should pay taxes because he has gotten something excess as compared to the money that he has paid or the consideration he has paid, and that's not fair, right? And what else? Section 56(7)(b). What does that do? What is that tax? 56(2)(10) is one part. What about 7B? Anyone who can tell me what is 7B? 7B is issue of fresh shares. What does that tax? The value should be higher there to tax it, or the value should be lower? So here the concept is opposite. Now the income tax department wants your fair value to be the lowest possible fair value. Why? Because they want to tax the amount that you're getting inside the company on issuing shares minus the fair value. But what about when you're transferring the shares from one person to the other? In that case, the formula is the opposite. They want to tax the value that you are the value that has been computed minus the value that you have actually paid as consideration. So the formula, basically the concept gets reversed. In one case, you have to prove that my value is higher, sir. Sir, my share value is genuinely 1,000 rupees per share. It is not 10 rupees per share. On the other side, I have to argue the opposite. So that's income tax for you. Income tax valuations can be done by chartered accountants. Which one can't be done by chartered accountants? DCF. All DCFs can't be done by chartered accountants, or DCF for a particular scenario. DCF for issue of shares, okay. So you can't do a valuation under DCF method wherever you have 5627B for issue of shares involved. Wherever there is equity shares involved, in case you have valued, you have talking about preference share issues, then chartered accountant can still value that. Okay, please remember that. Mr. Vaidyanathan is saying they have to register under wealth tax. So different valuers have different requirements. For SFA valuers under Income Tax Act, there is no requirement to register under wealth tax because they have simply not given any heed to the wealth tax valuers. They have simply said that if you're a chartered accountant or a merchant banker, then you can do that valuation. For preference share fresh issues, for equity share preference share issues, you can only merchant bankers can do it. Kamalji is saying valuation should be fair, neither higher or lower. But the idea is that the statute has provided for a particular way of computing the valuation, and the statute has also said that in case these values are different from the actual transaction price, and they will tax it. So we need to be also now look at the practical part of it. What about Companies Act? Why do you need valuations under Companies Act? What is the idea? What is the purpose of doing valuations under Companies Act from the government's end? When do you need valuations under Companies Act? Do you need valuations for a right issue? Rights issued is not required. Why not required? Because you are allowing all the shareholders to participate in the share that they already have, right? But you need it for private placement. Why? What is the idea? Who are you protecting when you are protecting this part that you're monitoring the private placement idea? To secure shareholders. Okay, which shareholders? Existing shareholders or new shareholders? Existing shareholders, right? Existing shareholders should be secured. And what else? I believe the existing shareholders should be secured, and also perhaps the new shareholders or the company should be secured, because you can't have somebody come in and the company's business going for a toss because of some bad valuations. Exactly, private placement is the word. That is where this valuation is required under Companies Act. What are other places where valuations are required? Mergers. Why is it required in mergers? We have already discussed that we're computing the swap ratio there. Why is the swap ratio required to be computed by an independent valuer and can't be allowed by the company to be done? Because there might be some partiality there which might cause certain shareholders to be aggrieved and certain shareholders to get surplus money from the whole affair. And what else? Minority shares. So in case you have to buy minority shares compulsorily, then of course you have to get the valuation done again, right? So that's where the valuations come in under all these legislations, where chartered accountants have a key role in strategizing with the various transactions. So I believe the next time you're structuring a transaction, whether it is about transfer of shares, purchase of shares, make sure that all these provisions are known to you so that you can advise better. What else? Financial reporting. India is fair valuation. How can I miss that? You need valuations for that also. So we already talked about all these things, that how these sections are there, these acts are there where you can try and do valuations. Investigations and compliance, you have to make sure that whatever information you have relied on is available with you, it is being recorded. So the basically the credibility and reliability of information provided should consider matters such as the purpose of valuation, the significance of information to valuation conclusion, the expertise of source in relation to subject matter, and whether the source is independent of either the subject asset and or the recipient of the valuation. Valuation record, you have to keep valuation record for a satisfactory time. 3 years is what the valuation record is required for under the code of conduct specified under registered value framework under the company's registered values and valuation rules. Compliance with other standards, you can do that. Valuation process, what do? You understand the business and key factors, what drives the business, what are the numbers that are important, what are the facts that are important. You plan and prepare for it, you review the forecasting techniques used by the client, review the future projections provided by the client, select the appropriate valuation model, apply sensitivity analysis on the projections, select approaches and methods of valuation, apply adjustments, and conclude the analytical results in the form of recommendations and conclusions. So this is how you do a valuation process. You understand all the M's, you understand manufacturing, what are the source of inputs, what are the suppliers list, what is the strategic planning and analysis of 5 forces Porter model, see how various forces are impacting the business, level of automation analysis of changes in technology, productivity ratio, value engineering, geographical locations of the plant, all that you need to do. Marketing, so market share, customer list, strategic partnership, dependence on customers, seasonal industry, cyclical industry, and so on. Management in KMP, you look at how the management is composed of, who is heading the organization, what capacity, what capability do they have. Money, credit rating, etc. You look at how the money is flowing, what is the leverage, what is the ratio analysis. Look at the stage of the company you're at. In case you're a startup company, you look at a valuation methodology which is entirely on the business model. Growing companies, you can look at sustainability on the business valuation. High growth companies, you can look at business model with asset base. Mature companies, declining companies. This is how you look at the various types of organizations that you can have. Coming to valuation report, so you have to put in all these things. You have to put in the background information of the asset being valued, purpose of valuation and appointing authority, identity of the valuer and any other experts involved in the valuation, disclosure of valuer interest or conflict, date of appointment, valuation date and date of report, inspections, investigations undertaken, nature and sources of information used or relied upon, procedures adopted in carrying out the valuation, and so on. Restrictions on the use of report, major factors. So this is the standard. This is what is supposed to be part of your report. That's what the standard says. And if you have not put that into your report, then you have to explain why not, what was wrong. You can so basically we can talk about this. These are like basically valuation report is IVS 30103, and we can talk about it at length. And there's a lot of information that you need to cover in the valuation report. But I think we will shift to the next important thing, that is the basis of value. So basis of value, also called standards of value, describe the fundamental premises on which the reported values will be based, and it is critical that the basis of value will be appropriate to the terms and purpose of the valuation assignment. So what are the possible, so you look at an assumed transaction, you look at the date of the transaction, you assume date of transaction and assumed party to the transaction. That is what varies. So in case you have a hypothetical transaction, actual transaction, purchase transaction, or sale transaction, or transaction in a particular or hypothetical market with specified characteristics, so all these are possible basis of value that you need to change. Assumed date of transactions might change. Then again, the scenario or the assumptions taken with respect to the parties might change. One can say, oh, they are hypothetical parties. One can say, oh, I know the buyer and the seller, and I'm trying to find out the value that they should exchange this asset with. And the other side, you say, oh, I will try and sell it in the market and see it. So then you're gauging the market, trying to see that, okay, what will be the market for that in the market. Basis of value, standards of value as per IBS 105 can be market value, equitable value, investment value, synergistic value, liquidation value, IFRS based fair value, and so on. So these are the basis of value. What is the premise of value? That is what you're trying to understand through this concept. Then, of course, there is a premise of value. Premise of value can be highest and best use, current use, orderly liquidation, or forced sale. That is what then you look at to try and find a premise of value. Valuation approaches can be threefold. It can be market approach, income approach, or cost approach. When you look at market approach, you're looking at the economic concept of price equilibrium. If Paytm is valued this much, then Nika should be valued this much. If this company has this P ratio, then this company should also have this P ratio, and so on. Income approach, what do you do? Try to do? You anticipate the benefits. You try and anticipate what are the benefits going to happen, what are the outflows going to happen in the future, and you try to find a value for that. Substitution, cost approach. So in cost approach, you try and again substitute the goods. You say, oh, what it will take, what cost will it take for me to build this again? What if I substitute this building with a new one? What will it cost me? And that is sometimes the value of those assets. Anyone who will like to try and give me an industry and give me an example where you want me to put the or share my understanding of the approaches that may be used to value those businesses? Put it on the chat box, whatever you want me to talk about, industry, or what will you like me to talk about with respect to which approach will be right in which manner, which industry. Punching any industry in case you want me to talk about it. Ready-made garments. Okay, ready-made garments. If you have an established business, if you have an established brand, then you can look at both market approach or income approach. And in case of income approach, you can look at DCF based approach, trying to anticipate the future numbers for that business. And for market approach, you will have to look at other similar people or competitors in the business and find out and understand if there is any record for transactions in their name or for their businesses. So in case you know that, say, one company was, say, bought by the other company for some 1,000 crores, then you will have the value for the other one also. Digital marketing business. Okay, so digital marketing business again is something that I think depends on cash flows more than anything else. Maybe in digital marketing business, I may not have any market comparables to value a digital marketing company per se, because it is more of a consultancy role. And I don't think there might be any transaction that one can use that there. So in a digital marketing company, you might want to do an income approach combined with the cost approach in case that is appropriate. Cost approach is sometimes appropriate for something like digital marketing team also, because then you say, okay, what will it take in case I want to build this today again? Restaurant, yes, restaurants, there are both methods possible. There's plenty of investments that have happened in the restaurant industry recently. Some restaurants are also publicly, restaurant companies are also publicly transacting. So one can find a market approach and income approach, perhaps both can be appropriate. Arpit Jainji is asking that how do you value antiques, paintings, etc., and for example, antique gold coins? Mostly market-based approach, Arpit, because you have various exchanges online and offline, and you try and gauge the kind of value that can be given by somebody who is a coin collector based on the prices which are available online, maybe discounting some of them so that it becomes a negotiated deal and not the seller's price. Paytm valuation, Kamal Parakji is saying. So Paytm valuation, sir, it have, in case you look at their draft, their red herring prospectus, we understand that their valuation has been done, explained in multiple ways, including market-based approaches as well as income-based approaches. Income-based approach is difficult to be used in Paytm, because in that case you have to expect results or changes that are going to happen in the future. So one can still do it, but the idea is that those numbers then can be corroborated with other numbers. So say in case Paytm's market capitalization at the maximum value that the maximum price at which it priced its IPO would be 1.34 crores, 1.34 lakh crores. The market cap of HDFC is 8.45 crores, 8.45 lakh crores. So the idea is that you can always see relatively which one will you like to buy, which one is looking to be safer to you, or should you invest in that stock or not. So in case you find that yes, Paytm is cheap, then do go through HDFC, see in case you find them to be cheap. So yeah, you should know that. Hotel property is operated by leading brand. Yes, Selvanji. So in that case, hotel properties, again, transactions are there, which talk about hotel properties are also revenue generating entities. So their revenue generation capacity is tested, along with a significant effort is then given, or significant weight is given to the idea that what is the cost of repairs and maintenance or refurbishment in the hotel, which will be required time and again. Sagar Shaji is saying under DCF method, we are projecting cash flows of company, but how to arrive at valuation of 10 different companies, which company A is holding? Do we have to compute DCF for all those companies as well? So in case you're talking about a conglomerate, this kind of a entity is also called basically an investment company. So the IVS 200 is very clear that in case of investment companies, you may approach cost approach. But when you talk about cost approach, there it talks about a summation method. So what you do is you sum up all the individual values of all those different companies, and to compute those different companies' values, you might again then consider or any of the three approaches, depending on the suitability on the same. IT parks engaged in leasing of property. So IT parks engaged in leasing of property are dependent on two, majorly on market price with respect to those properties. Number one. Number two, IT parks can then look at possible rental incomes in future, and how that has impacted the whole idea. So basically the idea is that income versus income and marketing would be my say, and that's how I will look at it. How under COVID related scenario? So basically COVID related scenario so COVID has affected perhaps some cash flows for some certain industries. COVID has impacted different industries differently, and that is what I will see. Maybe for restaurants, I will say COVID was very bad in the past, but maybe it will not be so bad in future. Let's be hopeful about that. For other such companies, it depends on how COVID has affected them. For international travel, for airlines, maybe COVID has affected them more deeply, and they might still take an year to recover to their pre-COVID levels of travel. It all depends on how fast you open up and what is the how the disease, how this virus and disease evolves over time. When RPGing, many times brand value, customer details are included in the valuation of the company, then why the deal is ended paying extra money in the form of goodwill. So whenever we talk about a company, we talk about the value of assets. That includes value of tangible assets as well as value of intangible assets. Value of assets can be value of tangible assets, can be value of plant and machinery, land and building, maybe other tangible assets that a company owns. Valuation of intangible assets can be customer engagements, customer contracts, your trademarks, your brands, and so on. So that is what your intangible assets are. Then you will have your financial assets. That's what you will value then. So apart from this, there is always this idea that a going concern entity will always have more value than a dead entity. So in case somebody has all these assets, but they are not a going concern, then they perhaps will have much lesser value. So that's what then you see that a going concern entity, whatever is the additional money you will like to pay for a going concern entity over and above the individual pieces that are visible in the company's asset list, is what you say is goodwill. So moving on, I am now moving on to the next idea that yes, valuation approaches are clear, I believe, I hope so. And then you have comparable transactions method, guideline publicly traded comparable method, anecdotal or rule of thumb method. In income approach, you have discounted cash flow method. In cost approach, you have replacement cost method, then reproduction cost method, summation method. Any of you who will like me to differentiate between any of these methods, if these are not absolutely clear to you, or maybe you will like me to talk about these in detail. So which one do you want me to talk about? Just put it on the chat box. I will talk about it. Anyone? All right, so I think all clear then. If you still find any differences or anything that you want me to clarify with respect to valuation approaches, I will be happy to do that. I think we have about a chat. Rule of thumb is, say, you say, okay, what is the value or construction cost of a building? So, you say, oh, it's 1,200 rupees a square foot, right? So rule of thumb that, mostly it is that. So it can be higher, lower, but you know that it will be around this much. What is the cost of a thermal power plant? 5 crore per megawatt. Yeah, 4 crore per megawatt. So that is the kind of rule of thumb that you use mostly. Any other rule of thumbs that come to your mind, do let me know. I will add to my knowledge as well. Yes, Siddhartha ji, I'm sharing this presentation with you very well. So market value is again estimated amount which you will sell in the market. I don't think we have the time to go to every valuation basis in detail. What I will rather do is I will talk about something that I might be missing in the overall scope of our discussion today. Let me try and see that. So I think I have already talked about the standards. So yeah, I should talk about briefly about why you should pursue valuation practice. So there are good opportunities available, and it's good quality work that you can do here. Repetition is rarely available in the valuation practice. You will get new cases, new case scenarios, new industries to deal with almost in every scenario. So it's a pretty good work. Role of CA in valuation. I think I've already talked about how valuations can be decided on by CAs. Techniques for valuation. Yes, this is the idea that you find the method, you find the basis, you understand the scope of work, make sure the valuation is being done for the right for an appropriate scope of work, and you're giving an appropriate value for the same, using an appropriate method, using all the information which is available with your client as well as the public data, following the valuation standards, and that's the key. That's the idea. So I think we can have some more questions about a few minutes left. I can stop my slide, and we can maybe take a few questions which I have not covered so far. Anyone will like to raise their hands, they can raise their hands. I'm happy to let the participants speak for the last few minutes, share their questions. Any questions from you, Rohit, that you think can be taken up? I'm looking at the chat box. I don't think there's anything there that I've left out.
Okay, so any of the professionals, if you have any of the questions in mind, you can put it up right now.
There was a question that I missed out, which I'm trying to find out. Oh, so okay. So for valuation examination, I think you should concentrate on the course material provided by the RVO. I think that's pretty thorough anyways. And in case you are anyways wanting to read further, there's so much material available online now that you can always have a look. Go to Professor Damodaran's blog, look at how he has talked about Paytm valuation, and Zomato valuation. Look at so many YouTube videos that are available online, and I'm sure that you will be able to understand the whole concept better and also understand the practical implications of various industries. CA. Okay, so there's a question that if a company wants to acquire any business or proprietor, then how the transaction and valuation take place? You look at the business and the proprietorship, maybe whatever business you want to acquire. So it's not banned for proprietorships to be sold. Proprietorships can always be acquired by somebody else. And valuing it is totally dependent on what will be the value in the market for such a business that somebody might like to buy, and it totally depends on the transfer of all the know-how that a proprietor has with respect to the business to the next person. So you have to understand the key thing in this kind of a proprietorship business is to understand that how much business will remain with the new person. So some of the clients perhaps of that person will go away because of a change. So if the location changes, that might have a serious impact on the business that is getting transferred to the new person. If that person is changing, that person is no longer part of the business, then that proprietor who was supposed to lead the company earlier, if he's not part of the company now, then that might change things as well. So that is what you need to understand perhaps. Then we have what orderly transaction is fundamental to market comparability. Not really. Orderly transaction is not fundamental to market comparability. When you talk about orderly transaction, you're saying that there's good marketing and there was sufficient time available. So yes, all that is there. But then there are ways, or there are scenarios when you have to compute the value where the orderly transaction is not there. And even in those cases, you tend to use market comparable, but with some kind of an adjustment factor. That is what you normally do. Then financials complying Ind AS, the disclosure of under FMV valuation standards permit to take transfer the same if there is deviation. What is the disclosure? So the idea is that the auditor always looks for a valuation certificate, and the company is free to get the valuation done internally also. But then yes, wherever the revaluations are being done, then the registered valuer has to do the valuations. And that is where I think it is important to understand that you can always disclose the disclosure of under FMV valuation standard permitted to take transfers. Basically, the idea is that the deviation should be disclosed. Yes, you're right. Is being CA necessary to become an RV? No, you can also be a CS, you can also be a management person. There are other ways that you can become a registered valuers. You're not supposed to be a CA. So you can always go to IBBI's website and see the eligibility criteria for SFA. And then maybe, if you're an engineer, mechanical engineer, electric engineer, you can become a P&M valuer. In case you're a civil engineer or you're an architect, then you can become a land and building valuer. So have a look. Which RO will you suggest? Public platform, I don't think I can name it, but ideas to go for is go for the RVOs which are having higher number of members. Number one, that criteria will help you. The second criteria that will help you is that whichever RVO is giving you a good slot which is suitable to your schedule of studies, that would be best. Then who is eligible for valuation officer? I am not sure which valuation officer are you talking about. I think you're talking about Sanjeet ji. You're asking about who is eligible for becoming a valuer professional. And then I think we have already answered that partly. Then I think, so what else? Sir, I'm basically an assistant professor of BCom. I'm in the webinar. Okay. So what should motivate students to become a good valuer? I think, yeah, valuer is one of the interesting ways to basically grow. Number one. Number two, let's hope that there's good money in this profession for whoever does this course. It has a global implication. You can always be a good valuer for across the globe. And I think to become a good valuer, you have to go through all the study material that maybe IBBI has prescribed. on becoming good valuers. CFA course is a very good course to study or to pursue in case you really want to become a good valuer. It's a very elaborate course, CFA USA. Want to know the practical implication of the subject that we teach in UG level? Okay, so yes, the way to understand practical applicability is either to take some training with somebody who has practical experience, or trying it firsthand with you, or with your own hands, or maybe looking at practical experiences being shared by other people. Valuation of IPOs is done by lead managers. Mitesh ji, lead managers test the market for the price at which the IPO will get sold, and that is what it is done. High valuations in recent IPOs, the market seem to have accepted these high valuations. Rather, in two cases which we are already listed, I think which you're talking about, these prices have the established listing price is way above the price at which they were offered. So we can always say that maybe the original owners who sold these shares made money, but also perhaps the people who got these or who were lucky to get shares allotted in the IPO also made money. Tips to clear exam in the first attempt: study hard, maybe, and try to be conceptually strong. The examination is a negative marking examination, so make sure that you're on top of all the concepts that might be tested. Practice MCQs as much as possible. You can appear for the examination while you're in job, but you cannot register yourself as a registered valuer. You can do that only perhaps after you have resigned or you are no longer in employment. CFA versus FRM with regard to valuation. I am not very sure about FRM, so therefore I won't be able to comment on that. I am sure about CFA. I am, frankly speaking, not aware of how the FRM course works and what is the syllabus, how tough it is. Not sure. I think all answers are done. Over to you, Rohit.
Okay. First of all, thank you so much. I hope all of your questions are mostly answered, because such a thorough effort have been put by Ankit sir today to answer each and every question. That was really such a sport of you, sir. So
I enjoyed this.
congratulations.
Thank you so much for participating, everyone. And
Yeah,
that
obviously.
is a learning session always when such participation happens. Thank you.
Yes, we feel delighted when it is an interactive session. That's really nice. Being an collaborators of audience and such an eminent faculties, we really are pleased if we get to have these kind of interactive sessions. So that's really nice. It
So
was
thank
such
you
a
so much. Thank you
yes.
so much, Rohit. Thank you for the participants. Thank you to all participants. I will share the presentation with the with your team, and maybe you can share it with the participants appropriately.
Yes, okay. It was really a very nice session. So, and it was
My
obviously
pleasure.
perfectly executed.
Thank you so
I hope
much.
there are so many beneficiaries from today's webinar, and we really hope to collaborate with you again, because you because you have been getting such a good response from our professionals. I hope they are really liking you, sir. So let's hope to collaborate again in future. Thank you so much
Thank
for
you,
this
Rohit.
intellectual
Thank you
session.
so much, Rohit. Thank you so
Okay.
much.
To all the
Thank you,
participants
everyone.
who missed this webinar, or due to any technical glitch or anything, you can go and watch it on our Optotax YouTube channel. It will be available at any time as per your convenience. So you can watch it at any time. So please stay connected, keep using Optotax, be safe, adhere to social distancing. Bye bye and good night.
Thank you, everyone. Good
Thank you.
night.
Thank you, sir.